Yo, what's going on, guys? Welcome back again to another video. In today's video, I'm going to show you a swing style trading strategy that I sometimes use on the larger size account to basically just set the trades and completely forget about them. And then basically we're going to be trading the weekly, not necessarily the weekly, but we're going to look at the weekly outlook and then trade the daily and the 4 hour and then execute on the trade the daily and the 4 hour and execute on the 1 hour time frame. So this is like a swing trading style for those who like to just chill and not be as much involved in the market as someone who day trades or scalp, right? If you have a full-time job, or you're busy, you have a family, whatever the case might be, this trading strategy will be the one for you. So I hope you enjoyed this video. If you do, please leave a like, comment down below if you have any questions, and make sure you guys are subscribed for more content like this. And with that being said, let's break it down. All right, guys, so the first thing I do is immediately go on the weekly time frame. That's the time frame where I start doing my analysis on. Right now, if you wonder, this EMA, it is the 50 EMA, exponential moving average, the 50 close. I have it in blue. You can have whatever color you'd like. And basically with the strategy, we're only going to be using the rectangle tool, right? We're going to be using these, and we're going to identify a super strong support and resistance. Okay, and I have my weekly in black and then my daily in blue. So when I'm on the 4 hour time frame or the 1 hour time frame and I see a zone, I know which area it's from. It's the 4 hour or the daily or the weekly. So looking at this charts right here, we have AUD CAD. Now you could do this on any other pair. I'm just picking, I just picked a random pair to show you guys that this works on any random pair of your desire. So where's the strongest area of market structure that we have right here? Now my eyes are immediately gravitating towards this area right here. Now we have a huge market structure here. We have a rejection of that same exact market structure. Market went down and then came back from this area and then sold again. Now where's our support? Support, my eyes are gravitating towards this area. I'm trying to find the median area, right? So there you go. We have our weekly support and resistance. We have our weekly demand and supply. From that point onward, and I see, okay, we are very much bearish so far. We haven't had any signals or indications that the market could respect this level and travel to the upside again. However, if it breaks, the next area would be somewhere around here, right? And then obviously final area would be somewhere down here. So these are the weekly levels that I have right here. You could find a median area. So right here, this would be the median area, because every time we're under it, we're selling. Every time we're above it, we're buying. So there's our weekly areas. Now we go down on the daily time frame and we look and see what has happened. Look how beautifully this broke, retest, continuation, came back again, rejection of the EMA, again, sell again. So now on the daily time frame, I zoom in a little bit more and I find the daily market structure levels, such as this one right here. Let's make that a daily, right? We had one right here as well. We had an area right here, which the market broke, retest, continuation, right? We have an area here too. So let's look for an area down here. Now I do see this area, which is a median area. From here, I'll grab it somewhere around there. That's the median area. It was just short of it here, but nonetheless, we have support, broke, resistance, continuation. It was just shy of it, rejected of these levels down here, as you can see. But nonetheless, we keep in mind these areas and just be cautious when you're selling this pair, if you do sell it. So once I do that on the weekly and the daily, now we go down on the 4-hour time frame. And the 4-hour, I simply wait for breaks and retest and a rejection of the EMA. So an ideal scenario would be, right, rejection from here, came back, retest, continuation. That's a scenario. Option number 2 is a clean break, retest, continuation. Simple as that. This is literally the simplest and easiest way to trade the markets without making it complicated at all. If you do want to put 4-hour levels, find a very strong area of confluence, such as this one right here. You can see how the market, when we're above it, we're buying, when we're below it, we're selling, rejection, rejection. So you can make this a 4-hour area, such as something like this. Boom. Look at that. Break, retest, continuation. Right? There's too much. It's a little bit away, but nonetheless, we can zoom in and find these median areas. If the daily and the 4-hour areas are aligned and sync, you don't have to put a 4-hour area rectangle. Just use the daily and bring it across, because it's the same area, right? And what I want you to do is pay attention to the round psychological levels. I always speak about round psychological levels and how I trade them, right? So pay attention to these levels. We are at the 89500 level. That's a QP, right? So we may see rejection. We'll just have to wait and see what actually happens. And then from there, our execution time frame is the 1 hourly time frame. Now, 1 hourly time frame, what do we look for? What do we look for? We look for some things like this: a wicks, right? Lots of rejection, lots of wicks and dojis and bearish engulfings if we're selling, or bearish engulfing if we're selling, and bullish engulfing if we're buying, of these levels, right? So look what happened here. That's a level. This right here, this candle, is a reversal candle. This right here is also a reversal candle, right? And then the following candle was a bearish engulfing. You could have entered a sell, boom, or waited for the break under the EMA, which is even better. Right here, beautiful break, retest, then rejection of the EMA, boom, another rejection of the EMA, bearish engulfing, and then you could have easily taken, oh, that's a buy, could have easily taken a short from here, stops just above, take profit down here, 1 to 2.6. You could have held it to the next zone, that's a 1 to 4, and you could have even held it to the weekly level, which is a 1 to 7.6. Beautiful, right? Amazing. That is literally all you do. But the most important thing with this strategy is patience. Patience, 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 because these setups will not develop overnight. Sometimes it will take days, sometimes it will take a day, sometimes it will take 4 hours, wherever the case may be. Patience with this strategy, right? So if we look at the 4-hour time frame, the only thing about the strategy, it takes time. Because if you look here, we have 4 hour, 8 hours, and then the following 4 hour only. After 16 hours, this played out. Here we have 4 hour, 8 hours, and then 8, that's 16 hours, and then another 4 hour, and then market started playing. So it takes time, right? That's the only thing with the strategy. You have to be patient. Right here we have 4 hour, 8 hours, and then the following 8 hour we started pushing to the upside. This is the only thing about this, the swing trading style trading, because it takes a long time for the market to develop these setups, because you have to sit on your hand and just wait and do absolutely nothing, right? We're on the daily time frame. This setup took 2 days. 1 day, 2 days, boom, continuation. 1 day, 2 day, rejection of the EMA, and on the weekly level, boom, 2 days. The third day, nothing happened, because at the end of the day, the market closed almost at entry, let's say, and then only the following day, the third day, even fourth day, started moving to the downside. So if you do want to swing, you're gonna have to be patient. You're gonna have a lot of patience. You can't be on a 10 minutes time frame, you know, taking setup. You can, but it's just risky. I personally wouldn't. The only time I go down to these time frames, the smaller time frames, is when I'm trying to find a very like a wick entry on the 4 hour time frame, or you know, trying to look for these sniper entries. That's the only time where I'd be looking for a what do you call it, a sniper entry. So right now the market is still bearish. We are above support, so I would do nothing until the market does something like this. Because look, structure is still bearish, making lower lows, lower highs. We don't know where this was going to close, and then if it starts doing this, you can see how the market switched to the upside. Boom. And right here is where you should be buying after the break of structure. Right here, after the break of structure, and then the retest, and then that's where you enter your buy if it does that. So this is the swing trading style. If you do guys want to do it, you just gotta be patient and have a lot of time. So this is it for today's video, guys. I hope you enjoyed this little beautiful strategy for swing traders, for those who are busy and don't really have much time to be on the charts. This will literally save your life, because you could literally just put on your trade and leave it for a few days, come back, and then you know, you don't have to be checking your phone every 2 and 3 minutes. So yeah, with that being said, I hope you guys enjoyed. If you did, like, comment, subscribe, and I'll see you guys in the next video. Take it easy.